Hello, welcome to our learning channel. Our today's lecture is about divine economics. In this lecture, we explore the profound integration of spirituality and economy in Islamic perspective of divine economics. This insightful lecture delves into divine economics, an innovative approach that merges ethical and spiritual values with economic practice, offering a unique perspective that contrasts sharply with conventional economic theories. Unlike traditional systems focused predominantly on profit, divine economics prioritizes moral values and community well being. The lecture begins with the definition of divine economics and its broader scope, illustrating its applications across finance, business, and social policies. It lays a theoretical foundation that not only challenges modern economic crises but also provides viable, sustainable solutions. This lecture is particularly crucial as it explains how divine economics could redefine socio-economic landscapes by embedding moral imperatives into the fabric of economic decision making. Further enriching the narrative is a comprehensive examination of divine economics evaluation within Islamic civilization. This discussion traces its roots back to the Quran and Hadith, showcasing how these religious cornerstones have shaped the economic principles of Muslim societies through the ages. The influence of prominent Islamic scholars and economists is highlighted, revealing their pivotal roles in nurturing this economic ideology over centuries. A compelling section of this lecture offers a comparative analysis with mainstream economic systems like capitalism and socialism. Participants gain deep insights into the philosophical variances, particularly the ethical orientation of divine economics as opposed to the profit centric frameworks of traditional economics. The efficiency of these systems is scrutinized in their ability to address critical issues such as poverty, inequality, and economic instability. The Islamic perspective of divine economics is a thought provoking exploration that not only traces the spiritual ethos behind economic transition in Islamic tradition, but also advocates for a radical shifts in global economic paradigms. This lecture is a must listen for anyone interested in the intersection of faith, ethics, and economics. At the heart of every society lies the complex and often challenging world of economics. Traditionally, economics has focused on the allocation of scarce resources, aiming to maximize wealth and efficiency. Yet, as we delve into the divine economics, we encounter a refreshing perspective that intervenes ethical consideration and spiritual values with economic principles. This unique approach not only redefines success in economic terms, but also prioritizes the well being and moral health of community. Divine economics stand distinct from conventional economic theories by its profound integration of morality and spirituality in the analysis and decision making processes. While traditional models often measure success through financial profit and growth indicators, divine economics seeks a broader impact, emphasizing sustainable and equitable outcomes that benefits all members of the society. The scope of divine economics extends across various sectors including finance, business, and social policy. In finance, it promotes practices that are not only profitable but also ethically sound. Supporting initiatives like microlending to underprivileged communities, and ethical investing. In businesses, it encourages companies to consider the social and environmental consequences of their operations, advocating for corporate responsibility that goes beyond mere compliances to foster genuine societal contribution. In addressing social policies, divine economics champions the idea that economic policies should be designed with compassion and inclusivity at their core, ensuring that no individual or community is economically left behind. This approach challenges policymakers to rethink how economic tools can be used to create more harmonious societies. As we explore the theoretical foundation of divine economics, we uncover a rich tapestry of ideas drawn from various philosophical and religious traditions. These theories provide a robust framework for practical implementation, offering insights into how business can operate ethically and how governments can craft policies that promote overall societal well being. In today's world, where economist disparities and ethical concerns are more pronounced than ever, divine economics offer a hopeful alternative. It's just a pathway towards an economic system that not only ensures financial stability but also fosters a sense of spiritual fulfillment and communal harmony. By embracing this holistic approach, societies can address some of the most pressing economic issues of our time in a sustainable and just manner. The root of divine economics in Islamic civilization can be traced back to the early Islamic periods, particularly through the teachings of the Quran and the Hadith. These texts provide a rich source of guidance on how economic life should be structured to reflect spiritual values and moral principles. The Quran, for instance, emphasizes fairness, justice, and the prohibition of usury, that is riba, which directly influence Islamic financial principles today. Islamic scholars and economists have played a pivotal role in interpreting these texts and applying their principles to economic system. One of the earliest figures was Abu Yusuf, a student of Imam Abu Hanifa, who wrote extensively on public finance and economic policy in his book Kitabul Khiraj. His work laid foundational economic concepts within the Islamic legal framework, influencing how resources should be managed in a way that benefits society as a whole. Throughout the centuries, other scholars have expanded on these ideas. Like Al Ghazali explored economic matters in his work Ahya Ulum Dunya, it means revival of religious sciences, where he discussed the spiritual dimensions of economic activities, advocating for an economy that supports ethical living and spiritual growth. His contributions highlight the integration of ethical considerations into economic practices, a hallmark of divine economics. In more recent times, the 20th century saw a resurgence in interest in Islamic economics, spurred by global discussion on economic justice and development. Scholars like Muhammad Bakir al Sadr and Muhammad Talghani revisited traditional texts to address contemporary economic issues, advocating for systems that not only ensures economic efficiency but also promote social justice and reduce disparities. The adaptation of divine economics over the centuries shows its flexibility and relevance to contemporary issues such as poverty, inequality, and sustainable development. By comparing divine economics with other historical economic systems like mercantilism or capitalism, it becomes evident that while most traditional economics focus primarily on profit maximization and material wealth, divine economics places a strong emphasis on human welfare and ethical values. This historical perspectives not only enrich our understanding of divine economics but also underscores its potential as a sustainable approach to modern economic challenges. By drawing from its rich heritage and adapting to modern contexts, divine economics continue to offer valuable insights into how economies can be structured around humanistic values and spiritual principles. Divine economics stands in stark contrast to conventional economic systems like capitalism and socialism, primarily through its foundational philosophy and ethical orientation. While capitalism focuses on maximizing profits and socialism on redistributing resources for equality, divine economics integrates ethical and spiritual dimensions into economic practices, aiming to enhance the well being of the entire community. The core of divine economics is its ethical base, which is deeply rooted in spiritual teachings. This system does not merely seeking economic efficiency, but emphasize moral values, spiritual accountability, and communal welfare. Discussions in divine economics are made considering their long term impact on society's moral and spiritual health, unlike in capitalism, where the immediate financial bottom line is often the primary concern. In terms of addressing social issues like poverty and inequality, divine economics proposes a fundamentally different approach from its conventional counterpart. While socialism attempts to manage these issues through state control and redistribution of wealth, and capitalism often neglects them in pursuit of economic growth. Divine economics seek to resolve them through community oriented policies and ethical wealth distribution. This includes zakat, which is a charitable giving, which is one of the pillar of Islamic finance and a critical element in reducing inequality and supporting community welfare. Economic stability is another area where divine economics diverges from traditional systems. Capitalist economies are prone to cycle of booms and busts due to their reliance on market forces and speculative investments. Society systems where more stable can suffer from inefficiencies due to excessive state control. Divine economics aims for a balanced approach, promoting economic stability through policies that encourage sustainable growth and prevent excessive wealth accumulation by individuals. Despite its noble goals, divine economics faces several challenges and criticism when compared to conventional economic systems. Critics argue that integrating spiritual and ethical dimensions into economic decision making might lead to subjective interpretations and could hinder pragmatic policy making. Such a system on a large scale, especially in pluralistic societies where diverse religious and moral viewpoints. Exploring these comparisons helps illuminate the unique aspects of divine economics and its potential to offer solutions to some of the persistent problems faced by modern economic systems. While challenges exist, the integration of spirituality and ethics into economics presents an alternative that could potentially lead to more equitable and sustainable economic practices worldwide. Divine ethics and economic practices delve deeply into the core principles that guide economic interactions under the framework of divine economics. The ethical mandate derived from the Quran and Hadith plays a crucial role in shaping economic behaviors and policies, ensuring that they are not only effective but also morally sound. These religious texts provides clear guidelines on conducting business and managing wealth, emphasizing fairness, transparency, and the welfare of the community. One of the key aspects of divine ethics in economic practice is the emphasis on fair trade. Islamic teachings advocate for honesty and fairness in all transactions. This includes prohibiting practices such as price manipulation, hoarding essential goods to create artificial scarcity, and exploiting workers. Such principles ensures that trade benefits all parties involved and contributes to a more equitable society. Wealth distribution is another critical area influenced by divine ethics. The Quran and Hadith encourage the wealthy to support the less fortunate through mechanisms like zakat and sadaqat. These practices are not only act of devotion but also serves as economic tools to redistribute wealth and reduce inequality. By mandating these charitable contributions, divine economics aim to create a balance where everyone has access to necessary resources, promoting social cohesion and stability. The prohibition of exploitation is a fundamental tenet in divine economics. Islamic teachings strongly discourage taking advantage of others, whether through usury, deception in trade, or unjust labor practices. This ethical stance ensures that individuals and businesses operates within a framework that respects human dignity and justice. In addition to outline these principles, we also discuss how a sense of responsibility is fostered among individuals and institutions. By integrating divine ethics into economic practices, stakeholders are constantly reminded of their duties toward others and the importance of their decisions on social well being. This accountability extends beyond personal gain and looks towards achieving a greater good. Practical examples of how divine ethics are applied in modern economic activities can be seen in various initiatives. For instance, Islamic banking and finance have grown significantly, offering products and services that comply with Islamic law. This includes non interest bearing loans and investments screened for ethical considerations, ensuring that financial activities contribute positively to society without compromising moral values. Through these discussions, it becomes evident that divine ethics are not just theoretical concepts but practical tools that have a profound impact on economic practices. They guide actions in a way that align with spiritual values while addressing contemporary economic challenges, making divine economics a unique blend of tradition and modernity. The concept of divine guidance in economic decision making is deeply rooted in Islamic teachings, where economic actions are not only seen as a means of survival or profit but as a way to fulfill religious obligations. The principle of Tawheed, the oneness of God, justice, and stewardship are central to this approach, guiding Muslims to make decisions that are not only economically sound but also ethically aligned with Islamic values. Tawheed, the belief in the oneness of God, influences economic behavior by promoting the idea that all wealth ultimately belong to God and humans are merely trustees. This belief shapes the way Muslims think about wealth creation and distribution, encouraging them to ensure that their economic activities do not harm others and are beneficial to society as a whole. The principle of justice, which is a significant theme in the Quran, further direct economic actions towards fairness and equity. It discourages practices such as exploitation or fraud, advocating for transparency and fairness in trade and commerce. Stewardship and other key concepts emphasize the responsibility of individuals to manage resources wisely in an economic context. This translates into sustainable practices and policies that do not deplete or damage natural resources, ensuring that future generations inherit a healthy environment. This principle is particularly relevant today as concerns about environmental sustainability and ethical consumption grow. Religious scholars and leaders play a crucial role in interpreting these principles and guiding the community's economic decisions. Their interpretations help bridge in ancient text with contemporary issues, providing insights that are both spiritually grounded and practically applicable. During financial crisis or when new forms of transactions emerge, such as digital currencies, the insights from these scholars help determine how best to align these developments with Islamic ethical standards. Case studies from various Islamic societies illustrate successful outcomes when divine guidance is applied to economic decision making. For example, in some Muslim majority countries, Islamic banking principles that prohibits interest, that is riba, have led to the development of innovative financial products that comply with religious laws and provide viable economic benefits. These products not only avoid exploitation but also promote risk sharing between the lender and borrower, aligning with both ethical mandates and economic functionality. Despite these successes, integrating divine guidance into modern economic system presents both challenges and opportunities. One challenge is the diverse interpretation of Islamic teachings, which can lead to different opinions on what constitutes ethical economic behavior. Additionally, there is the practical challenge of implementing these principles in a global economy that is largely secular and profit driven. Nevertheless, the opportunities for creating a more ethical economic systems are vast. By emphasizing ethics over profit maximization, opportunities for creating a moral ethical economic system are vast. By emphasizing ethics over profit maximization, businesses can build trust with consumers and create more stable economic economies. Moreover, focusing on sustainability can lead to innovations that not only comply with religious principles but also advance environmental goals. Ultimately, divine guidance offers a unique framework for making economic decisions that balance material needs with spiritual values. By adhering to principles like Tawheed, justice, and stewardship, and seeking insights from religious scholars, Muslims around the world strive to create an economic system that is both prosperous and ethical. Zakat, one of the fundamental pillars of Islam, is more than just a religious duty. It is a powerful tool for social equality and economic justice. At its core, Zakat mandates that Muslim gives a fixed portion of their accumulated wealth to those in need, thereby playing a pivotal role in the redistribution of resources. This act of giving is not only about charity but is also seen as a purification of one's wealth. The concept of zakat is deeply embedded in the Islamic ethos of community and compassion. By requiring the wealthy to contribute to the welfare of the less fortunate, it aims to mitigate the disparities in wealth and can lead to social unrest. This system ensures that everyone has access to basic necessities like food, shelter, and health, which are essential for leading to a dignified life. The impact of zakat extends beyond immediate financial aid. It fosters a sense of belonging and collective responsibility among members of the Muslim community. This feeling of interconnectedness is crucial in a world where individualism often takes precedence over communal welfare. In examining the role of zakat within modern economies, it becomes apparent that this ancient practice hold valuable lessons for contemporary issues of wealth inequality. As nations grapple with economic disparities, the principles underlying zakat offer a blueprint for how to achieve more equitable distribution of resources. Exploring how zakat functions today reveals its potential as a sustainable model for social welfare and economic stability. Through this lens, we can appreciate not only its spiritual significance but also its practical relevance in today's globalized world. Sadqa, a voluntary charity, is a deeply ingrained Islamic practice that complements the structured approach of zakat in promoting social welfare and resource distribution. Unlike zakat, which has specific guidelines and obligatory contributions, sadaqah is characterized by its voluntary nature. This means that everyone, regardless of their functional status, can contribute whatever they can, whenever they choose. This flexibility makes sadaqah an accessible and inclusive form of charity. The impact of sadaqah on community welfare is profound and multifaceted by allowing individuals to contribute towards causes they are passionate about. Sadaqah fosters a personalized approach to charity. This can lead to more targeted and effective assistance because donors are often motivated by a personal connection to the cause. For instance, someone who has experienced the challenges of illiteracy may choose to donate towards educational programs. Sadqa also plays a critical role in emergency situations such as natural disaster or humanitarian crisis. During these times, the immediate and flexible nature of Sadqa donations can make a significant difference in relief efforts. Quick contributions can help provide essential services like food, water, and medical aid much faster than many formal aid channels. In addition to providing immediate benefits, Sadqa also helps build long term resilience in communities. By supporting projects in education and healthcare, Sadqa donations can lead to sustainable improvements in the quality of life. Education donations might fund scholarships or school supplies, helping to lift individuals out of poverty and stimulate economic growth within the community. The concept of sadqa deeply encourages spontaneous acts of kindness, which strengthens the social bonds within a community. When people see others contributing to the welfare of their community, it inspires them to participate as well. This creates a ripple effect of generosity and enhance the social cohesion and overall resilience of the community. Through its flexibility and inclusivity, Sadqa serves as a powerful tool for social welfare that complements the structured contributions of Zakat. Together, these practices are a comprehensive approach to charity that not only addresses immediate need but also fosters long term community development. Impact of Sadqa extends beyond financial aid. It cultivates a culture of care and cooperation that is essential for any thriving society. Waqf. Waqf is an Islamic philanthropic tradition. It has been instrumental in shaping sustainable economic landscapes across Muslim communities. This practice involves dedicating a portion of one's property or wealth permanently for public welfare. The assets designated as waqf are managed with the intention that the benefits derived from them are to be used for charitable or religious purposes. The principal amount remains intact while the income generated is utilized to fund various community projects. The concept of Waqf is unique because it creates a self sustaining resource pool that does not deplete. Unlike other forms of charity that provides immediate and temporary relief, Waqf ensures a continuous flow of benefits. This has made it a key tool in building and sustaining economic stability and growth over centuries. Historically, Waqf has supported the construction and maintenance of mosques, schools, hospitals, and even infrastructures like bridges and waterfalls, which have had profound impact on social welfare and economic development. In contemporary times, the role of Waqf has been revisited as a viable solution to modern economic challenges. With increasing economic disparity and resource constraints, reviving Waqf could provide necessary funding for education, healthcare, and social services without burdening state budgets. This is particularly relevant in regions where public resources are limited and the needs are great. The management of Waqf requires transparency and efficiency to ensure that the funds are used effectively. Modern management practices can be integrated with traditional Waqf structures to enhance accountability and maximize impact. By adopting contemporary functional management techniques, Waqf institutions can increase their revenue generation capabilities and expand their scope of work. The revival of Waqf in today's economic system also opens up opportunity for international cooperation. By collaborating on Waqf funded projects, countries can promote global development goals while respecting cultural and religious traditions. This could lead to innovative partnerships that leverage Waqf for broader humanitarian and development objectives. Waqf thus hold significant promise as a sustainable economic tool that can contribute to long-term development and prosperity. Its ability to fund perpetual charitable activities makes it an enduring legacy that can adapt to changing economic conditions while maintaining its core objectives of serving humanity. Economic justice is a fundamental principle in Islamic teachings, and the mechanism of Ushur and Khums are pivotal in achieving this. Ushur, which translates to a tenth in an obligatory tithe on agriculture produce that farmers are required to pay. This tax is specifically levied on crops that benefits from natural resources like rain or fertile land without substantial human intervention. The collected ushur is then distributed among the poor and needy, ensuring that they receive a share of the agricultural abundance. Homes, on the other hand, is more comprehensive in its scope. It applied to 20% of a person's surplus income after their annual expenses. This includes profit from businesses, earnings from employments, and even funding from treasure troves. Homes serves two primary purposes. Half of it goes to the descendants of Prophet Muhammad sallallahu alaihi wasallam as a recognition of their special place in society, and the other half is used for charitable purposes and to support the Islamic leadership in their community services. The application of these taxes in contemporary settings varies, but their impact on reducing income inequality is significant. In regions where Usher and Homes are actively practiced, they provide a systematic way to support economic justice. The funds raised through these taxes are used to finance public projects, assist the poor, and support educational and health services in the community. The practice of Usher and Homes also encourages Muslims to be constantly aware of their social responsibilities. By setting aside a portion of their income and produce, they are reminded of the needs of others and the importance of community welfare. This not only helps in redistributing wealth but also fosters a spirit of generosity and mutual support within the community. Implementing these taxes effectively requires careful administration to ensure that the collected funds are used appropriately. Modern Islamic economies that incorporate usher and homes can look towards creating transparent systems that track the collection and distribution of these funds. By doing so, they can maximize the impact of these financial obligations in promoting economic justice and reducing disparities within society. Ultimately, usher and homes are not merely religious duties but are powerful tools for economic redistribution. When implemented effectively, they can help bridge the gap between the rich and the poor, promoting a more equitable society as envisioned in Islamic teachings. Integrating modern economic policies with Islamic ethics involves a thoughtful blend of age old traditions and contemporary economic strategies. This integration is not only feasible but also essential for creating economies that are both dynamic and equitable. By embedding principles such as zakat, sadaqah, and work into fiscal and monetary policies, governments can craft systems that foster economic growth while ensuring fair distribution of resources. One of the key challenges in this integration is the adaptation of Islamic financial principles to fit modern economic frameworks. Traditional Islamic finance prohibits interest, that is riba, and emphasizes risk sharing. To align with these principles, modern financial instruments could be redesigned. For instance, Islamic bonds known as sukuk are structured in such a way that they generate returns to investors in framing Islamic law. These bonds represents partial ownership in debt-free assets and earnings are derived from the assets cash flow. The role of government is pivotal in facilitating this integration. By establishing regulatory bodies to oversee the compliances of financial practices with Islamic ethics, governments can ensure that these principles are upheld in both spirit and practice. Such regulatory bodies could work alongside traditional financial regulators, ensuring that all financial activities not only meet legal requirements but also conform to ethical standards set forth in Islamic teachings. Social justice is another significant aspect of integrating Islamic ethics with modern economic policies. Islamic finance inherently seeks to eliminate exploitation and promote equity. These objectives align closely with contemporary concerns about economic inequality and poverty alleviation. Policies inspired by zakat and sadaqah can be structured to systematically reduce wealth disparity by redistributing income from the richer segments of society to the poorer. Education plays a crucial role in this integration process. By educating financial professionals and the public about Islamic financial principles, societies can cultivate a more informed approach to economics that respect cultural values while promoting economic innovation. Education programs can focus on the benefits of risk sharing methods, ethical investing, and charitable contributions as a tool for economic stability and growth. The successful integration of modern economic policies with Islamic ethics requires ongoing dialogues between economists, religious scholars, policymakers, and the community. Such discussions can help refine these principles so they effectively address contemporary economic issues while remaining true to their ethical roots. By embracing these modern economic theories and Islamic teachings, societies can strive towards more just and sustainable economic systems that benefits all individuals. This approach not only enhances social cohesion but also contributes to global efforts in tackling economic disparities, proving that ancient wisdom can indeed complement modern insights to solve today's challenges. Now we're going to discuss the framework of Islamic finance. Islamic finance is distinguished by its adherence to Sharia law, which are derived from the Quran and the Hadith. One of the core principles of Islamic finance is the prohibition of interest known as riba. This principle leads to the development of unique financial instruments that are not only compliant with Islamic law but also designed to promote fairness and ethical investing. Mudarba or profit sharing. It is a partnership where one party provides capital while the other provides expertise and management. Profits are shared as per agreed ratios, but loss is borne only by the provider of the capital. This arrangement aligns with Islamic values by sharing risk and reward, promoting mutual cooperation and exploitative practices. Musharka or joint venture. It is another form of partnership. Unlike Mudarba, all partners in Musharka contribute capital and share profit and losses according to their respective investment. This investment is often used in business ventures where all partners wish to have active involvement in management. The risk sharing features of Musharka makes it a preferred mode for many businesses financing needs in Islamic countries. Hijara, comparable to leasing. It involves selling the usufruct of a particular product for a specific rent and period. The lessor retains ownership of the asset, while the lessee benefits from using it. This arrangement is clear of riba as it involves fixed rental payments instead of interest based lending. Ijara is widely used for assets such as real estate vehicles. Sukuk, often referred to as Islamic bond, represents a significant innovation in Islamic finance. Unlike conventional bonds that promises to pay interest on borrowed money, Sukuk offered investors a share in an assets along with the commensurate cash flows and risks. Sukuk issuance has been growing globally, attracting both Muslims and non-Muslims investors interested in ethical investment. These Sharia compliant instruments reflects a financial system grounded in ethical principles that avoid uncertainty, gharar, and speculation. Maisar. They emphasize transparency, risk sharing, and the avoidance of harm, which are all key components of ethical business practices under Sharia law. The global impact of these instruments is noteworthy. They have not only provided Muslim majority countries with tools compatible with their cultural and religious beliefs, but have also attracted global investors looking for ethical instrument opportunities. The growth of Islamic finance has prompted conventional financial institutions to explore Sharia compliant products, thereby broadening the market reach of each instrument. The success stories from various Islamic countries demonstrate the practical viability and economic benefits of these instruments. They have helped in capital formation, infrastructure development, and provided avenue for savings investments that are in line with investors' religious beliefs and ethical considerations. By adhering to Sharia principles, These financial instruments offer an alternative model of finance that challenges conventional systems while contributing positively to economic stability and social welfare. Their increasing acceptance around the world suggests a growing recognition of their potential to promote more equitable economic growth and financial inclusivity. Islamic banks play a crucial role in fostering economic development, particularly within the framework of divine economics, which integrates moral and ethical principles into financial practices. These banks are distinctive because they operate according to Islamic law, which emphasize real economic activity and assets banking rather than interest based transactions. This approach not only aligns with religious directives but also contributes to a more stable economic environment. One of the core principles of Islamic banking is the prohibition of interest. Instead, these banks focus on profit and loss sharing arrangements. Products like Mudarba and Musharka allow customers and banks to share the risks and rewards of investment ventures. This methods encourages responsible financing and investment, as both parties have a direct stake in the success of the projects. Islamic banks are particularly supportive of small and medium enterprises SMEs. SMEs often struggle to secure financing from conventional banks, which may view these smaller entities as high risk. However, Islamic banks, with their emphasis on asset-based financing and risk sharing, often provides more opportunities for SMEs to obtain the necessary funds for growth. This support is vital for job creation and economic diversification in many regions. In addition to supporting SMEs, Islamic banks also play a significant role in community development projects. They invest in initiatives that not only promise good returns but also contribute to the welfare of the community. This could include funding educational facilities, healthcare institutions, and infrastructure projects that improve the quality of life for many people. Despite their contributions to economic stability and development, Islamic banks face several challenges. Regulatory issues are a significant hurdle. The legal frameworks in many countries are primarily designed for conventional financial systems, and adapting these to accommodate Sharia compliant instruments can be complex. Moreover, Islamic banks often compete with conventional banks that have more established systems and wider acceptance. The competition with conventional banks brings additional challenges, including the needs of Islamic banks to continually innovate to attract customers who might otherwise opt for traditional banking products. Despite these challenges, proposition of Islamic banking focusing on ethical financing and investment continue to attract a growing base of customers seeking alternatives to conventional banking methods. Generally, Islamic banks significantly impact economic development by providing financial services that are not only economically beneficial but also ethically sound. They support key sectors such as SMEs and contribute to community welfare through strategic investments, playing a vital role in creating a more stable and inclusive economic environment. Regulatory frameworks and governance are crucial in Islamic finance to ensure that operations not only abide by Sharia principle but also align with international financial standards. This dual compliance maintains the integrity and global competitiveness of Islamic financial institutions. The governance of these institutions involve various bodies including Sharia boards, regulatory authorities and financial auditors. each playing a distinct role in the oversight processes. Sharia boards are central to the governing structure of Islamic banks and financial institutions. These boards comprise scholars well versed in Islamic law who oversee the compliance of financial products and services with Sharia principles. Their responsibilities extend beyond mere approval of products. They also engage in monitoring and auditing to ensure continuous adherence to Islamic ethics and law. The integration of international financial regulations represent a unique challenge for Islamic finance. Global standards such as those set by the Basel Committee on Banking Supervision or the International Financial Reporting Standards IFRS are designed primarily for conventional financial systems. Adapting these standards to fit Sharia compliant operations require innovative approaches and sometimes complex modifications to ensure that Islamic financial institutions remain both compliant and competitive on the world stage. Countries like Malaysia and member of the Gulf Cooperation Councils have developed robust regulatory environments that serves as benchmarks in Islamic finance. Malaysia, for instance, has implemented comprehensive frameworks that govern the entire spectrum of Islamic financial products and services. These frameworks are supported by strong regulatory bodies such as the Central Bank of Malaysia, Bank Niagara Malaysia, which ensures that both financial stability and Sharia compliances are maintained. The challenges of harmonizing global financial standards with local religious practices often lead to variations in how Islamic finance is practiced in different regions. While this can pose difficulties in terms of consistency and transparency, it also allows for a rich diversity of practices that can be tailored to local economic and cultural context. This adaptability is seen as both a strength and a challenge for the growth of Islamic finance globally. Best practices from leading markets provides valuable lessons for other regions aiming to develop their Islamic finance sectors. These practices include rigorous training for Sharia board members, clear guidelines on Sharia compliance processes, regular internal and external audits, and transparent communication with stakeholders. By adopting these practices, new markets can build robust governance structure that uphold both Sharia principles and international standards, fostering trust and encouraging investment. Ultimately, effective regulatory frameworks and governance mechanisms are essential for the sustainability and growth of Islamic finance. By ensuring compliance with Sharia law and international regulations, these frameworks help Islamic financial institutions participate fully in the global market while retaining their unique ethical identity. The landscape of Islamic finance is continually evolving with innovations designed to meet the modern financial needs while adhering to Sharia principles. One of the most significant advancements in recent years has been the introduction of new Sharia compliant investment fund. These funds are structured to exclude investments in businesses that are considered haram, such as those involved in alcohol, gambling, and tobacco, among others. Instead, they focus on sectors demand halal, such as healthcare, technology, and clean energy, aligning investment opportunities with moral and ethical considerations. Digital Islamic banking services represent another breakthrough in making financial services more accessible while maintaining compliance with Islamic law. These digital platforms offer a range of services from basic banking functions to complex assets management, all without compromising Sharia principles. The use of technology not only enhances customer experience but also improves the efficiency and reach of Islamic banking services, making them available to a wider audience across different regions. The integration of fintech solutions like blockchain based smart contracts in Islamic finance is another area of innovation. These smart contracts automate the execution of contracts under preset conditions, reducing the need for intermediaries and thereby lowering transactions costs. This technology also adds a layer of security and transparency, qualities much valued in Islamic finance. Blockchain's potential extends beyond smart contracts. It can also enhance the reliability of halal supply chain by ensuring products remain compliant from production to delivery. Islamic finance is also finding its role in supporting sustainable development goals and green finance initiatives. Many new Sharia compliant financial products are designed to fund projects that have positive environmental impact, such as renewable energy installations and eco friendly agricultural practices. This alignment with green finance not only helps attract ethically conscious investors but also contributes to broader global efforts against climate change. Despite these innovations, there are challenges that need addressing to ensure these new products remain compliant with Islamic principles and competitive with conventional financial effort. The balance between adhering to religious doctrines and embracing modern financial practices is delicate. Sharia boards play a crucial role in this aspect by vetting new products and services to ensure do not violate Islamic laws. Case studies from around the Islamic world illustrate the successful implementation of these innovative products. For instance, a particular Islamic bank in Malaysia has successfully integrated blockchain technology to streamline its zakat collection system, ensuring more efficient and transparent fund distribution to those in need. As the sector continues to grow, the ongoing challenge for Islamic finance will be to keep innovating while strictly adhering to Sharia principles. The future of Islamic finance depends on its ability to adapt to new technologies and market demands while staying true to its ethical roots. This dynamic tension between tradition and innovation will likely shape the future trajectory of the industry. Islamic finance, once a niche market primarily within Muslim majority countries, has significantly expanded its footprint globally. This growth is evidenced by the increased interest from non Muslim majority countries in adopting Islamic financial practices. Countries such as the United Kingdom, Japan, and South Africa have explored Islamic finance to diversify their financial services and appeal to global investors seeking ethical investment opportunities. This shift is not merely about expanding market shares, but also about the strategic integration of ethical, sustainable finance principles that are core to Islamic finance. The impact of Islamic finance on global markets can be seen in its contribution to financial inclusion. Traditional banking often overlooks certain segments of society, either due to their financial status or because of the interest based structure of the most financial products, which some individuals choose to avoid for religious reasons. Islamic finance provides an alternative by offering products that comply with Sharia law, which prohibits interest and emphasizes financial dealings based on real economic activities. This approach not only aligns with the ethical values of many individuals but also brings previously underserved populations into the fold of financial services. International financial institutions like the World Bank and the International Monetary Fund have recognized the potential of Islamic finance in promoting inclusive economic growth. These institutions have been involved in various initiatives to integrate Islamic financial systems with global financial markets. They provide technical assistance and policy advice to countries developing their Islamic finance sectors, collaborate on projects that fund infrastructure and development initiatives through Sharia compliant bonds known as Sukuk. Despite its growing influence, Islamic finance faces several challenges on the global stage. One significant hurdle is the perception issue. Many people still hold misconceptions about the nature of Islamic finance, associating it solely with religious doctrine without understanding its economic benefits and ethical foundations. These perceptions can hinder broader acceptance and integration into mainstream global finance. Another challenge is the need for more robust global regulatory frameworks to govern Islamic finance practices effectively. While Islamic finance must comply with Sharia law, there is also a need for standardization across different jurisdictions to ensure consistency and stability in international financial interactions. The lack of uniform standards can lead to complications in cross border transactions and limit the growth potential of Islamic financial institutions. As Islamic finance continues to evolve, it remains a key player in the broader context of global economic activities, promoting not only financial growth but also sustainable and ethical development across diverse communities. Its principles of risk sharing and prohibition of speculation contribute to more stable financial systems, which is increasingly appealing in a world looking for alternatives to interest based banking crisis. The ongoing development of Islamic finance holds promises for further integration into global markets, offering a blend of tradition and innovation that respects cultural values while meeting modern economic needs. Now we will solve modern challenges with ancient wisdom. Ancient Islamic economic principles, rooted deeply in ethics and morality, offer a unique perspective on managing economic affairs that is increasingly relevant in today's complex financial landscapes. These principles emphasize social justice, equitable distribution of wealth, and prohibition of usury, which can be instrumental in addressing modern issues like income inequality and financial instability. One of the core concepts of Islamic economics is the idea of zakat, a form of almsgiving treated in Islam as a religious obligation or tax. It requires individuals to donate a portion of their wealth to those in need, which helps in reducing poverty and balancing wealth distribution. This principle can be adapted into modern welfare policies where more progressive taxation systems are designed to support the underprivileged sectors of society. Another significant aspect is the prohibition of riba, interest. In ancient times, this was intended to prevent exploitation through debt. Today, this can inspire policies that aim to control predatory lending practices, and excessive credit card interest rates that lead to a high level of debt among the poor and middle classes. Implementing regulations that cap interest rates and promote fair loans terms are always modern policymakers can use this ancient wisdom. Case studies from around the world demonstrate the successful integration of these principles into contemporary economic policies. For instance, some countries have experienced with Islamic banking and financial systems that adhere to these principles and have witnessed enhanced financial stability and growth. These systems avoid speculative behavior and ensure that investments have tangible assets behind them, which reduces the risk of financial bubbles. Integrating these ancient principles into modern economies does present challenges. The global economic environment is vastly diverse with varying cultural, social, and political contexts. Policymakers must navigate these differences to create adaptable policies that respect local traditions while promoting global economic stability. To effectively incorporate ancient economic wisdom into current frameworks, policymakers need to engage with a wide range of stakeholders, including religious leaders, economists, and the community at large. Educational initiatives that increase awareness of Islamic economic principles and their benefits could foster greater acceptance and implementation. By revisiting these age old practices, modern economies can find sustainable solutions to some of their most pressing issues. The blend of moral foundations with practical applications offers a holistic approach to economic reforms that ensures prosperity and fairness for all members of society. Islamic financial tools have gained attention as effective mechanism to address global financial instability. Unlike conventional finance system, Islamic finance is based on principles of risk sharing and probation of interest, which aligns with broader ethical finance principles. This alignment not only promotes fairness but also contributes to the stability of financial systems by avoiding the creation of debt bubbles and speculative activities that are common in conventional systems. One of the prominent Islamic financial instrument is the sukuk, often referred to as Islamic bonds. Unlike traditional bonds that involve the payment of interest, sukuks are structured in a way that investors receive a share of the profits from an asset. This ensures that investments are backed by real economic activities, reducing the risk of financial speculation. The use of sukuk has been instrumental in raising capital for large scale infrastructure projects in various countries, demonstrating its effectiveness in contributing to sustainable economic development. Another significant tool is mudarba, a profit sharing contract where one party provides capital while the other provides expertise and management. This arrangement encourages entrepreneurship and resource optimization because both parties share profits and losses, fostering a sense of mutual responsibility and ethical business practices. Modarba has been particularly used in fostering small and medium sized enterprises that are often overlooked by conventional banks due to their perceived high risk and low collateral. Potential for Islamic finance to reduce the vulnerability of, of economies to shock is notable. By promoting risk sharing and banning speculative products, Islamic financial tools can help create a more resilient economic environment. During the 2008 global financial crisis, Islamic banks were less affected than their conventional counterparts, largely due to their strict adherence to non speculative asset backed financing. Countries like Malaysia and the United Arab Emirates have successfully integrated Islamic financial instruments into their financial systems, setting benchmark for others. Malaysia, for instance, has developed a robust regulatory framework that supports its growth of Islamic finance, making it a central component of its economic system. The success stories from these countries provide valuable lessons for others looking to incorporate Islamic finance principles into their economies. Despite these advantages, there are barriers to the widespread adoption of Islamic financial tools, particularly in non Islamic countries. This includes a lack of understanding of Islamic finance principles among both consumers and financial professionals, limited regulatory frameworks that can accommodate these principles, and potential conflicts with existing financial laws and practices. Educational initiatives aimed at increasing awareness and understanding of Islamic finance, coupled with regulatory reforms that recognize and integrate its principles, could pave the way for broader adoption. As global economies become increasingly interconnected and susceptible to various shocks, integrating ethical and stable financial practices like those offered by Islamic finance could be key to achieving the more resilient economic systems worldwide. The concept of waqf, an Islamic endowment of property to be held in trust and used for charitable or religious purpose, has a rich history dating back centuries. This traditional form of charity could play a pivotal role in contemporary community development and social welfare. By revesting and revitalizing Waqf, communities around the world could benefit from a sustainable source of funding for various social projects. Waqf assets traditionally include real estate, cash, or other properties, the income from which is dedicated to maintaining specific philanthropic or religious activities. In modern context, this could translate into funding schools, hospitals, and public infrastructure, thereby providing continual benefits to the community. The self sustaining nature of Waqf makes it an attractive option for long term development projects without the need for ongoing fundraising. One of the innovative adaptation in today's application of Waqf is its integration with contemporary financial tools. For instance, the creation of Waqf based investment funds can help generate continuous revenue streams while adhering to ethical investment guidelines. These funds can support educational scholarships, healthcare services, and even startup incubation programs, all structured around Islamic financial principles that prohibit interests and promote risk sharing. Technology also plays a crucial role in modernizing the management of Waqf. With digital platforms, the administration of these endowments can become more transparent and efficient. Blockchain technology, for example, offers a promising way to track the flow of funds and ensure that they are being used as intended. This can help build trust among donors and beneficiaries alike, potentially increasing the willingness of more people to contribute to Waqf. However, reviving Waqf on a global scale requires navigating various legal and regulatory changes. Each country has its own legal framework that can either enable or hinder the effective use of Waqf. Reforming these laws to accommodate Waqf could involve creating favorable tax policies, simplifying the process of registering Waqf properties, and ensuring that governance structure are in place to manage these assets responsibly. Overall, by addressing these legal barriers and harnessing modern financial tools and technology, Waqf can be revitalized as a powerful mechanism for social welfare and community development. This ancient practice has the potential not only to address immediate needs but also to foster a sustainable model for future generations. Islamic ethics, deeply rooted in principles of transparency, accountability, and fairness, offers a robust framework for modern corporate governance. These values are not only central to Islamic teachings but are also universally recognized as pillars of good corporate practice. By integrating these ethical guidelines, corporations can enhance their decision making processes and align more closely with global standards for corporate responsibility. The application of Islamic ethical principles in business operations begins with transparency. This involves clear communication with stakeholders about the company's operations, financial performance, and decision making processes. Transparency builds trust and ensures that all actions taken by the corporation are visible to those affected by them, preventing corruption and fostering a positive corporate image. Accountability is another critical aspect. It requires that individuals and entities within a corporation are held responsible for their actions. This principle ensures that decisions are made thoughtfully, considering the welfare of all stakeholders, including employees, customers, stakeholders, and the community at large. When accountability is prioritized, it can lead to higher levels of stakeholder confidence and loyalty. Fairness in corporate governance involves equitable treatment of all stakeholders. It ensures that the corporation's activities do not favor one group over another and that all practices are just and equitable. This can be particularly challenging in diverse investment where stakeholders may have conflicting interests. Nonetheless, adherence to fairness prevents discrimination and promotes a harmonious working environment. The benefits of incorporating these Islamic ethical principles into corporate governance extend beyond compliance with moral standards. They can significantly enhance a corporation's reputation. In today's socially connected world, ethical misstep can damage a company's reputation almost instantaneously. Conversely, a reputation for ethical integrity can greatly enhance a company's appeal to investors, consumers, and potential employees. Besides these benefits of corporations of challenges in aligning their operations with Islamic ethics. These challenges may include resistance to change within the corporate culture or conflicts between ethical practices and short term profit goals. Overcoming these obstacles often requires strong leadership communities to ethical principles and willing to invest in training and development programs that embed these values at all levels of the organization. To support corporations instead interested in adopting Islamic ethical practices, recommendations can be made for gradual integration. Starting with training sessions that outline the benefits of ethical governance can pave the way for deeper changes. Additionally, clear policies and reflects these ethical principles can help institutionalize them within the company's culture. By embracing Islamic ethics in corporate governance, companies not only adhere to moral principles but also position themselves competitively in a global market that increasingly values ethical conduct. This approach not only benefits the cooperation but also contributes positively to the broader economic landscapes by promoting sustainable business practices that respect human values and social welfare. The notation of Khalifa or stewardship. is deeply embedded in Islamic teachings, emphasizing the responsibility of humans to protect and preserve the environment. This concept is particularly relevant today as the world faced unprecedented environmental challenges, including climate change, deforestation, and pollution. Islamic stewardship advocates for a balanced approach to resource management, ensuring that economic development does not come at the expense of environmental degradation. Islamic teaching encourage the conservation of water and land, promoting practices that prevent waste and pollution. Now we discuss global impact and future outlook. Globalization has significantly reshaped the landscape of economies worldwide, intervening markets and cultures in unprecedented ways. This interconnectedness presents unique challenges and opportunities for the integration of Islamic economic principles in the global economy. Islamic economies, which emphasize Islamic economics, which emphasize fairness, transparency, and the welfare of the community, often finds itself at odds with conventional economic systems that prioritize profit maximization and individualism. One of the primary challenge in merging Islamic economic principles with global practices is the adherence to interest-free financial transactions. Interest or riba is strictly prohibited in Islam as it is believed to lead to exploitation and social injustice. This prohibition poses difficulties in international trade and finance, where interest based transactions are commonplace. Islamic banks and financial institutions have navigated these challenges by developing Sharia compliant products such as Sukuk and Musharka, which allows them to engage in global markets without compromising their religious principles. The rise of multinational Islamic corporations has been instrumental in promoting ethical economic practices on a global scale. These corporations not only adhere to Islamic laws in their operations but also champion the causes of economic justice and ethical standards. By implementing practices such as profit sharing and risk sharing, they provide a model of sustainable and equitable business practices that construct sharply with those of many Western corporations, focused closely on shareholders' value. The impact of global economic policies on Islamic economic laws is profound. Policies that promote free trade and deregulations can sometimes conflict with the principles of Islamic economics, which advocate for controlled economic measures to ensure fairness and protect the less privileged. Navigating these conflicts required careful policy analysis and strategic planning to ensure that Islamic principles can coexist with global economic demands. To maintain economic justice and ethical standards aimed global economic pressure, several strategies can be implemented. For instance, education plays a crucial role in raising awareness about Islamic economics and its benefits not only within Muslim communities but also in the broader global context. Strengthening international cooperation among Islamic countries can also help promote a unified approach to global economic challenges. Investing in technology to develop innovative financial products can further enhance the competitiveness of Islamic finance on the world stage. As globalization continues to evolve, it is imperative that stakeholders in Islamic finance remain vigilant and adaptable. By continuing to innovate and advocate for ethical practices, they can ensure that Islamic economic principles not only survive but thrive in a globalized world. This approach not only benefits Muslim communities but also contributes to a more just and equitable global economy. The integration of technology in economics has been transformed across various functional systems worldwide, and divine economics is no expectation. As we delve into the realm of technology advancements, it is crucial to understand how emerging technologies such as artificial intelligence, blockchain, and financial technology, that is fintech, are influencing Islamic economic principles. These technologies offer promising avenue to enhance transparency, efficiency, and adherence to standards prescribed in Islamic finance. Artificial intelligence, for instance, is playing a pivotal role in automating complex financial processes that adhere to Sharia law. AI systems can be programmed to automatically detect and avoid transactions that do not comply with Islamic principles, such as those involving interest, that is riba, or gambling, that is miser. This capability speed up the processing of financial activities, but also ensures that they remain within the ethical boundaries of Islamic law. Blockchain technology offers another significant advantage in divine economics. Known for its robust security and transparency, blockchain can revolutionize how Islamic financial transactions are recorded and validated. This technology can help eliminate the need for intermediaries, reducing the chances of fraud and increasing trust among participants. Its application in the management of zakat is particularly noteworthy. Blockchain can provide a transparent and immutable ledger for zakat collection and distribution, ensuring that the funds reach the intended beneficiaries without any mismanagement or corruption. Fintech involved innovations have also made substantial inroads into Islamic finance, facilitating easier access to financial services for people who adhere strictly to Islamic law. Digital platforms enables users to conduct transactions that comply with Islamic principles from anywhere in the world. This accessibility is crucial for fostering economic activities that conform to religious beliefs, especially in regions where conventional banking does not cater adequately to such needs. Despite these advancements, the development of technology in divine economics is not without challenges. Ethical consideration must be at the forefront when integrating new technologies. The use of AI and data analytics raises concerns about privacy and data security, which must be addressed to maintain the trust of all stakeholders involved. Ensuring that these technologies do not inadvertently lead to discriminatory practices is also essential. Looking toward the future, the prospects for integrating AI, blockchains, and fintech within Islamic banking look promising. Continued innovation and thoughtful implementation of these technologies could lead to more inclusive financial systems that not only comply with Islamic laws but also promote greater economic justice globally. As we move forward, it will be crucial for scholars, technologists, and financialists to collaborate closely to ensure that technological advancement contribute positively to the goals of divine economics, enhancing both economic practices and ethical compliance. As the world continues to evolve, so too does the landscape of Islamic economic policies. Anticipated future trends suggest significant shifts in how monetary, fiscal, and trade policies are formulated and implemented under divine economics. These changes are driven by a need to align more closely with Sharia principles while also responding to global economic dynamics. One of the key areas of focus is the modifications of monetary policies to ensure a Sharia compliant money supply and effective inflation control mechanisms. Islamic finance principles prohibits interest and emphasize risk sharing. Therefore, central banks in Islamic countries might look towards more innovative tools that comply with these principles. For instance, they could develop new Sharia compliant liquidity management instruments. These tools would not only help in controlling money supply but also in stabilizing prices without compromising on the ethical grounds set by Islamic law. Fiscal policies are also expected to undergo transformation of public spending priorities within an Islamic framework is crucial in addressing social welfare more effectively. Governments might increase allocation for sectors like healthcare, education, and social services, ensure that these essential services align with Islamic values of community supports and equality. This shift not only helps in elevating the standards of living, but also adhere to the Islamic duty of caring for less fortunate. Trade policies under divine economics are likely to be influenced by international economic agreements. As countries around the world continue to enter into various trade agreements, Islamic nations must navigate these waters carefully. The challenges lies in engaging in such agreements while ensuring that they do not conflict with Sharia laws. This might lead to the creation of new frameworks for international trade that are specifically designed for Islamic economics, promoting ethical trade practices that can serve as a model globally. Lastly, enhancing the global competitiveness of Islamic economies remains a critical strategy. This involves not only improving the economic output but also ensuring that these economies are perceived as viable alternatives that uphold high ethical standards. Strategies might include investing in technology and innovation, improving workforce skills in alignment with Sharia principles, and enhancing the legal frameworks to attract foreign investments while ensuring compliance with Islamic laws. These anticipated challenges and strategies highlight a dynamic approach towards integrating traditional modern economic demands. The future of Islamic economic policies looks poised to foster a more ethical, equitable, and prosperous global economy. Sustainability and long term goals are central to the framework of divine economics, particularly through the lens of Islamic teachings, which emphasize stewardship of the earth. This perspective is not only about adherence to religious principles, but also about practical steps to sustainable development. Islamic teachings advocate for moderation, balance, and respect for nature, which align seamlessly with contemporary environmental sustainability goals. The concept of halal, which is often associated with permissible dietary practices, extends into broader economic activities under divine economics. It promotes not only what is permissible but also what is tayyib or wholesome. This dual principle can guide sustainable consumption and production by encouraging practices that are not only compliant with Islamic law but also environmentally friendly and socially responsible. For instance, in agriculture and manufacturing, this might mean choosing methods that reduce environmental impact and ensure fair labor practices. Islamic finance plays a pivotal role in supporting these sustainability goals. Offers unique models like green scope Islamic bonds, which renewable energy in projects and other environmental beneficial initiatives. These financial instruments align investors' returns with positive environmental impacts, demonstrating a practical application of Islamic principles in addressing modern challenges like climate change and resource scarcity. Renewable energy initiatives are recognizing the long term benefits not only for the environment but also for economic stability and energy security. The potential for Islamic economies to lead global sustainability effort is substantial. By integrating ethical, environmental, and social dimensions, Islamic economic principles can offer a holistic model that addresses the shortcomings of conventional economic systems. This leadership can be pivotal at international forums on climate change and sustainability, where Islamic economies commitments to ethical and sustainable practices through policymaking and innovative financial products. Ultimately, the integration of sustainability into divine economic through Islamic teachings provide a robust framework for addressing contemporary environmental challenges. By adhering to principles of halal and tayyib, leveraging Islamic finance for green projects, and leading by example in global sustainability of efforts, Islamic economies have the potential to make significant contributions to global environmental stewardship. This approach not only fulfills religious obligations but also addresses critical global needs for sustainable development as recent area of study. This exploration begins with understanding how Islamic economic principles, deeply rooted in ethics and justice, can be adapted to diverse cultural landscapes while preserving their core values. The adaptability of these principles is crucial for their acceptance and effectiveness in different societal contexts. Education and awareness plays pivotal roles in promoting Islamic economics on a global scale. By educating people about the benefit and ethical foundation of divine economics, it becomes easier to integrate these principles into different cultures. Educational initiatives can range from academic courses and seminars to community workshops that highlights how Islamic finance contributes to fairer and more equitable economic system. One of the challenges in this is harmonizing traditional Islamic economic practices with modern global practices. This includes reconciling conventional banking systems with Sharia compliant financial instruments, which avoid interest and speculative instruments investments. The challenge lies not only in the technical adaptation but also in overcoming cultural resistance towards alternative economic models. Case studies from various parts of the world provides with valuable insights into successful adaptation and implementation of divine economics. For instance, in Southeast Asia, countries like Malaysia have successfully integrated Islamic banking with their national financial systems, offering products that comply with Islamic laws while remaining competitive globally. Similarly, in Western countries such as the United Kingdom and Canada, there are growing number of financial institutions that offer Sharia compliant services, indicating a positive reception and adaptation to local economic climates. These case studies not only demonstrate the practical viability of divine economics in non-traditional settings but also highlights the cultural negotiations that accompany the adoption of these principles. They show how different religions can maintain their cultural identity while embracing an economic systems that promotes social justice and ethical financial practices. Through these discussions and analysis, it becomes evident that the spread of divine economics is not just about economic reform but also about cultural adaptation. As this economic system continue to evolve globally, it holds the potential to foster a more inclusive and ethically oriented approach to economics worldwide. Thank you very much.